Joining us now is Peter McGuire from XM to discuss the latest in macro moves and markets. Good afternoon, Peter.
Well, good afternoon, Danielle. How are you? Tuesday, and here we go.
Tuesday, and here we go. And yes, it has been extremely volatile. I mean, I've certainly noticed it in the bond markets, but also as some of these companies start to report their earnings. 15% moves in share prices seems to be quite common at the moment. So what do you think is driving this volatility that we're seeing?
Well, I'll tell you what, I've just seen something come across my screen here. Exports dropped 14.5% year on year in July for China, worst decline since February 2020, and imports fall 12.4%. Much deeper than economists expected. So, I mean, that tells the story in a lot of ways. It's all about demand. It's all about, if you're looking at US companies, how much are they earning money outside of the US as far as revenue, and how much is internal. And there are some countries or regions that are performing very well and some are hemorrhaging.
Yeah, indeed. I saw those numbers as well. They were, I thought, terribly weak. And certainly the Australian dollar has been very weak today as well. It's currently off about 0.45%. But of course, markets are really going to be looking out to that CPI reading on Thursday from America. Have you got any particular thoughts? There's some concerns that we have seen an uptick in wheat prices and the oil price. And of course, it has a different base effect from last year. How are you going to be trading into this?
Well, I agree with you. And, it's been an almighty trade for energy over the last couple of weeks, very, very strongly bid up. And here we go at, the best part of 82, 85, between 82.40 for WTI, and Brent's sitting at about 85.5. So when I take that on board, that's not a good sign. It's a good sign if you're a producer, but not good if you're a consumer. And that's in US dollars, of course. So the other side is, I'm looking at the Cleveland Fed nowcast model. How's that one sound? Because that's what analysts look at, and it seems to be a true indicator as far as inflation and what we're looking at as far as headline and core, and they're looking for it to increase 0.4% for both. So if that's going to be the case, then are we going to see another rate rise for the States this year? And is inflation on the way back up, or is it just a blip?
Yeah, absolutely. That is the key question that everybody's going to be looking towards. Maybe we can pick up a chart that we have, the Forex daily performance, to check in and see what's happening with some of these currency moves as well. And maybe you can run us through those, Peter.
Well, exactly. I mean, the yen, the first one up, has just been outstanding as far as volatility. Trading between 137 and 142 over the last week and a half to 2 week window. So it's just been, if you want to trade on a market, there's one to start with, US dollar yen. As far as you're looking at the dollar index, back around 102.4. That's the first market I look at daily. And it should be on everyone's radar as far as that US dollar index. It's weighted at about 61% to the euro. I also obviously look in our region how our dollar's performing, and the New Zealand dollar against the US. And then I look at the energy markets, and you can see it all there, all of it coming together. And have a look also, the Great British Pound as a cross rate against the yen and against the euro. So there's plenty of points to look at. The markets never sleep. And you do your research, lay different charts over other charts in the sense of stock markets over currencies, and you'll see trends. And the trend is your friend.
Indeed, one that I learnt very early on. Are you surprised by how weak the Australian dollar has been against the US dollar?
Well, not really, because we didn't raise rates last week, and everyone else did. There's the first part. And then the other side of it is, of course, we were a proxy for China. And have a look at I just read those numbers out for China. They're very damning. So, no, I'm not surprised. And let's just see if we can stay in the 65 zone. Wouldn't be too good if you were a traveller. I won't be surprised to possibly see it maybe a little bit further south from here. And who knows, it could even have a 64 handle sometime this month.
Indeed, and those China's numbers, as you've just touched on, they are terribly, well, put it this way, do you think markets are going to start to look again for the authorities in China to do more than just the tweaking at the edges? Because it really seems, I heard a rather strange report that they're trying to crack down on news agencies and anyone reporting using the word deflation in relation to the Chinese economy, which I thought was quite interesting. So as a casual observer, it does look like the problems are not diminishing for China. They look like they're just continuing to add up at the moment.
Well, exactly. And I spoke with a colleague this morning, and as far as political unrest, and you've got a large slice of their youth population, anyone under 30, that's over 25% haven't got a job. So that's not a good sign to start with. The second part of it is, yes, you'll need structural reform economically to try and boost internal consumption. And that needs to be a top-down approach, and it needs to be fairly aggressive, because you've got to get your own house in order, because they rely so much on exporting goods, and it's a weak consumption base pretty much globally. So there's that part of it. The people have got less in their pockets due to inflation. And the third part is, how quickly are they going to turn this around? Is it going to be done in a matter of weeks or months, or is it going to just be a slow drip feed? And that's not what everyone really wants. They've got to make some hard decisions and some big decisions quickly.
Yeah, absolutely. And before we have to go, any thoughts about reporting season here in Australia? As we said, there's quite a bit of volatility in terms of some of the earnings. What do you think investors are going to be focusing on the most?
Well, what sector specific, and whether it's mining, or if it's services, or it's hospitality, or pharmaceutical, or whatever, or where it fits. And I think that's the point that you've got to be considerate of. There are some sectors that are performing far better than other sectors, and some are languishing. Some perform well in 2021, 22, and they've given back some of those gains. They're exhausted as far as price. So that's not unusual either. So I think you've just got to pick the right market, do your research, draw your own conclusions, but more importantly, look where they sit economically, cash flows, forecast, strategy, and competition entering the market. It sounds business case stuff for any, a budding bachelor of business at uni. They'd be looking at all of that, or a high school student, but that's pretty much what it's about. There's no tricks to this. It's just simple. Is the business able to maintain its current earnings profile, or is it suffering?